All right, this is still Chapter 5, and we're talking about Objective 5.2, revenue recognition, in particular for merchandise sales. um, we'll talk a little bit about when is it a sale. So there's this term FOB, free on board, and in an invoice and between the customer and the seller, they determine if it's FOB shipping point or FOB destination. So if it's shipping point, all you have to do is push the product off of your dock and it's sold. If it's destination, it's not sold until it's received. So that's some of the detail. Some other invoice terms are you have to say how long the customer has to pay, and then in some terms they provide discounts. So this is 2 right here, 210. The N is for net 30. This means if you pay within 10 days, you get a 2% discount here. Otherwise, pay in 30 days. Okay. So how do we apply these discounts? If you have an account receivable and you paid your discount, the account receivable removed is 1,000. The sale discount is 2% of 1,000, which would be 20, and the customer would send you 980. And you're going to see we're going to take this 20 off of sales revenue and have something called net sales revenue, which is in fact on income statements what companies display. It's sales revenue net or net sales revenue. So here we see the discount applied. Just typed out for you. Same problem, just typed out. Okay. Now, allowances are also permitted, returns and allowances. So a return would be you sent us the wrong thing or the product was damaged, we're going to return it. Allowances, well, we asked for the purple shirts, but you sent us the red ones, so they might give you part of the merchandise off or something, some of your receivable off. So if, for example, it's damage in shipping and they give you $1,000 allowance, it's you remove the receivable and you have allowance. This is another item that is netted against sales revenue, and on the income statement, net sales revenue would be reported. All right, so that's a good place to stop this video. That's for sales return and allowances and discounts. The take-home message is that for all of those, they're netted against sales revenue, so that only sales revenue net of discounts, allowance, or returns is what gets credited.